Have you ever driven around your town and noticed a bunch of brand new houses with for sale signs out front? These empty houses are actually a sign of an even bigger problem that few people are talking about, especially now that mortgage rates are climbing higher than ever. And when I tell you that this is more than just a real estate problem, I mean it. Because when homes become unaffordable, it leads to an entire generation losing the American dream. So let's not waste any time. Here's the real story behind why 2025 may go down in history as the year everything changed. Now, before we dive into this, I want you to take a minute to imagine a day in the life of two families. On one side, you have the Smiths. They're a typical family living in the suburbs, raising kids, working hard. In fact, they were finally ready to start their forever home. They found their dream house, locked in their mortgage, and felt great about their investment. Then on the other side, we have the Joneses. They also have kids, similar jobs, similar dreams. But they live in a big city. For them, buying a home seemed impossible. The cost was just way too high. So they rented a place near their office and put their home ownership dreams on hold. Fast forward a couple of years and things changed dramatically. The Smiths, after some promotions, are now able to afford a bigger, nicer home. But when they look around, they see the same Jones family moving into the home next door. Now you might be thinking, hey, that's great for the Jones family. More power to them. But here's where things take a turn. The Joneses were able to buy their new home because prices dropped. The Smiths didn't realize this until it was too late. They got stuck in a weird situation. They see their neighbors moving in for less money than they paid. Suddenly they begin to question whether they overpaid. And you know what? They might have. And it's all because of a shocking prediction that most people aren't paying attention to. According to Realtor.com, by 2030, the U.S. will face a shortage of 3.8 million homes. Imagine our two families living in that world. The Smiths are probably wondering why they didn't buy sooner. Meanwhile, the Joneses, well, they might be wondering if they should have bought sooner too. It's not about blaming them. It's about understanding that owning a home used to be a goal for most Americans. But today it's becoming more of a luxury. And guess what? I'm not the only one saying this. Even top Wall Street firms are making headlines with their predictions about the housing market. Goldman Sachs is forecasting that home prices will fall another 6% through 2024, which would be the biggest decline since 2010. Now you might say, what does that mean for me? Well, according to their forecast, they predict that median home prices will be back to pre-pandemic levels by the end of 2024. In other words, we could be seeing a repeat of 2008, but this time, it could be worse. And it all comes down to the buyers who can't afford homes in this economy. So here's the harsh reality. The typical home buyer today needs to spend about 36% of their monthly income on housing. That means they have less money left over for healthcare, food, transportation, and savings. And that's not sustainable. But hold on, because I've got more data to share. According to my analysis, from 2022 to 2023 alone, the average mortgage payment went up by $780. That's nearly $10,000 a year. And here's the kicker. About 25% of homeowners are renting out extra rooms on Airbnb to help cover their mortgage payments. It's a surprising trend that shows how desperate people are getting. But there's something else that's equally concerning. Delinquencies are on the rise and foreclosures are coming back. What does this mean? Well, more than 369,000 homeowners are behind on their mortgage payments, and almost 1.5 million loans are at risk of delinquency. Look, I don't like to scare you, but it's important to be prepared, especially now that BlackRock, the world's largest investment firm, has issued a warning that global markets are on the verge of chaos. You're probably wondering, what's the worst that could happen? Well, if you look at the data, BlackRock warns that property markets are among the most vulnerable to rising interest rates, and the risk of recession is increasing. Why? Because higher interest rates hurt borrowers who took out adjustable rate mortgages when rates were low. They're now paying more, have less disposable income, and can't sell their homes without taking a loss. It's a vicious cycle. On top of this, here's the breaking point. Redfin recently reported that mortgage demand has plummeted to its lowest level since 2000. This is what they call a leading indicator of the housing market. You see, when people lose their jobs or worry about the economy, They cut back on discretionary spending. And guess what's usually the first thing on the chopping block? Mortgages. People stop moving, which means they stop buying homes. So here's the bottom line. Home prices are falling, mortgage demand is dropping, and the number of people who can afford a home is shrinking. We're facing a perfect storm. But wait, there's more. Another report from Redfin reveals that sales of newly built homes fell for the 11th straight month in July. Now you might think, okay, big deal. What does that mean? Well, it's a big deal. Builder confidence has dropped to its lowest level since 2008, except for 2008, except that builders are cutting prices to attract buyers. Let me break this down for you. For the first time since 2009, the median price of a newly built home has fallen below $400,000. That's a drop of over 10% in just a few months. And this trend is spreading like wildfire. Builders are now offering incentives worth nearly $40,000, including reduced mortgage rates, closing cost assistance, and free upgrades. And that makes sense, right? With fewer buyers in the market, they have to do something to stand out. And here's where things get really interesting. Home builders are changing the way they build homes. They're scaling back on luxury finishes and downgrading materials to keep costs down. But that raises a crucial question. How far can prices fall before builders scale back even more? After all, they can't keep building homes at a loss forever. Now, I know you're probably wondering why only some places are seeing these price drops. Are certain cities or regions going to be hit harder than others? And if so, where should you focus your attention? Let me explain. Markets like Austin, Texas, Boise, Idaho, Charlotte, North Carolina have seen the steepest declines with drops of more than 11%. Why? Because they saw some of the biggest price increases during the pandemic. The laws of supply and demand are at play. When prices rise quickly, they often correct just as rapidly. Here's the good news. Areas like Atlanta, Phoenix, Tampa, Florida, and Las Vegas have remained relatively stable. So far, they haven't seen significant price drops yet. But remember, this crisis is affecting everyone, including the biggest banks in America. Just last week, Wells Fargo issued a warning that a wave of foreclosures is coming soon, and experts predict that as many as 1 million homeowners could face foreclosure in the next 2 years. Now, I understand that this sounds alarming, but I'm not trying to scare you. I'm here to open your eyes to what's happening in the real estate market. Whether you're a homeowner, potential buyer, or investor, it's essential to be aware of the challenges that lie ahead. So here's the advice I want you to take away from this video. If you're planning to buy a home anytime soon, now is the time to prepare. Understand that homes may be more affordable in the coming months, but it's crucial to approach the market cautiously. Don't rush into buying a home just because prices are falling. Instead, take the time to assess your financial situation, improve your credit score, and save a substantial down payment. By doing so, you'll be in a better position to secure a favorable mortgage rate and navigate the market effectively. But what if you're not interested in buying a home right now? That's okay too. As long as you understand the implications for renters, rental prices may continue to increase due to the reduced supply of available homes. This could lead to more competition among renters and limited choices on the market. Additionally, landlords may face higher mortgage payments themselves, which could impact rental affordability. As we navigate these uncertain times, it's essential to stay informed and adapt to the evolving real estate market. I encourage you to subscribe to BrickStart for weekly updates on the latest developments. And if you found this video helpful, please like and share it with others. Together, we can navigate this journey towards a brighter financial future. Thank you for watching.